If you're looking for a strong yield in 2025, do you pick Darwin or Townsville?
Which one would be the better choice with at least a yield of 5.5?
Townsville has absolutely exploded in price over the past few years.
Townsville hasn't missed the boat. There's still room for growth. Gross regional product 21.3 billion.
But is Darwin the sleeping giant that's set for some serious growth moving forward?
Compared to Townsville, there's a lot of infrastructure projects happening in there.
Together with data analyst and founder of Suburbs finder Gilbert Melgar, we pull apart Darwin versus Townsville to give you guys a better understanding on what the data is saying both of these markets look like in 2025.
Townsville versus Darwin. From a data perspective, I would say
with interest rates finally coming down and some markets even more on the move now, balancing some yield in your property portfolio has never been more important when it comes to growth. And two of those areas under strong consideration are Darwin and Townsville. So let's look a little closer with a property data expert. My name's Todd Sloan. This is the Pizza and Property Podcast. And this episode is powered by Future-Proof Property Advisory, Investor Kit, Suburbs Finder, and Property Strats. More about our amazing show sponsors in the show notes below. Right now, let's jump into the episode with Gilbert Melgar. Darwin versus Townsville. This is going to be a good episode. How you going, Gilbert?
Good, man. Happy as always.
Mate, I'm glad to have you back here. I think I was about to say I'm glad to have you back here, but I'm glad to have you back here to unpack the data behind Darwin and Townsville. If you're looking for high-yielding areas at the moment in 2025 in Australia, undoubtedly, these are going to be two areas that you're looking at. Darwin's got some pretty solid yields. Some are looking at it going, maybe this is too early or maybe it's just never going to grow. Others are looking at Townsville going, well, have I missed the boat? Like, is all the growth done? Which is why when you and I were chatting off air a little while ago about this episode, I was like, I think this is going to provide people a lot of good information to better understand the comparison between both locations. But before we get into like big picture economics, Darwin, Townsville, is there anything you wanted to set the stage with, mate?
Well, first of all, thanks for having me again. The reason why we're doing this is that we can have a better understanding which one would be the better choice between the two locations and the two suburbs that we're zooming in.
Got it. Because you've picked a few suburbs as well, haven't you?
Yeah. In terms of yield.
Gotcha. Yeah. Okay. So we're looking at it from that yield play, but also looking at it through the lens of, is one of them too early and is one of them too late?
Exactly. And also we've set a ceiling of price range between 450 to 550.
Okay. So very affordable price range in this, like today's markets.
Exactly. And with at least a yield of 5.5 gross.
Okay. So anywhere in the country now, that is now considered a pretty good yield.
Yeah. Considering the interest rate that we have.
Love it. All right, man. Let's talk big picture. Are we talking big picture of Darwin and Townsville, or are we talking big picture economically, like of the suburb? How have you put this together?
Well, I put it on an LGA level.
Okay.
Right. So between Townsville and Darwin, gross regional product, Townsville 21.3 billion versus Darwin's 13.4 billion.
13.4. For anyone wondering as well, Townsville is bigger than Darwin population-wise, isn't it?
Yes, definitely. That's the reason why the per capita, in terms of population-wise, that's 200,000 people in Townsville. Versus 150,000 people in Darwin.
So as much as like Townsville is looked upon as like a small regional kind of city, it's like in comparison, whilst Darwin is technically a capital like of Northern Territory, Townsville is a bigger place.
Yes.
Got it. Okay. So 13 billion versus 21 billion. What's next?
And then, of course, per capita, 90 grand for Townsville. And since Darwin has less population, even though the GRP is 13.4 billion, so the per capita is 166,000. So it's more compared, or it's higher compared to Townsville.
Just simply because there's not as many people.
Exactly.
Got it.
And in terms of unemployment, Townsville, 4.1, and in Darwin, 3%.
Okay, so as far as unemployment rate's concerned, Townsville is a little bit higher, but it's not like drastically different, but certainly higher.
Yep.
Got it. What's next?
So that would be on an LGA level, right? And one thing that we've looked at in terms of LGA level is the number of people looking at the buy section or the potential buyers.
Okay. Well, you're talking about like people literally on like realestate.com a domain.
Yes. And other online listing sites. So they're looking at the for sale or the buy section with the intention to buy or with other intention.
Okay. Do you ever see that data get skewed? Like when people just kind of look out of curiosity rather than look with genuine intent? Or is it usually it's like whilst there can be a bit of that, that's more of an anomaly?
Yes, it can definitely be skewed sometimes. That's why it's just one factor that you need to look at and then apply that or combine that with other data metrics. But it's a good indication of the market interest.
Gotcha. And what does it look like if we're comparing these two LGAs?
So between the two LGAs, there are really more interest in Townsville as an LGA compared to Darwin, because there's a huge gap or difference between the two.
How huge is huge?
4,600 latest December data for Townsville.
Okay.
As an LGA.
So
right?
that's like people looking.
Yes.
And what about in
and
Darwin?
then 1,600 for Darwin. Even if we say 20% anomaly,
It's still a huge difference.
still huge difference.
All right. And so this is 4,600, just so I can clarify this data as well. Individual searches, or does this track like IP addresses, like people searching? What is it actually tracking?
These are IP address.
So this is actually people rather than like one person that's just going nuts looking at it 4,000 times. Yeah. That would be pretty intense. But anyway. All right. So 4,600 for Townsville versus 1,600 for Darwin. So already it's looking like there's a lot more pressure around it. But this is, again, coming back to the whole point, and I think the question a lot of people have got on their lips is it too late? Because this is kind of showing a very hot market versus maybe a market that isn't even like getting close to boiling yet. So let's keep moving through it. What does the data continue to say?
Well, we're going to zoom in on two different suburbs now. So for Northern Territory or Darwin, we stick within the LGA of Darwin. So we have Karama versus Townsville's Kirwan. So Karama's crime score is 10. Definitely a safe area.
That's really low.
Yeah, it's really low compared to Kirwan's 30, which is still low.
That's still pretty good. And now you explained this on a previous episode as well. So basically anything below 50 is generally considered like okay.
So for this one, anything below 25, crime rarely happen. So definitely people are not affected by what's happening.
So this is a couple of kids doing a bit of knock and run and getting in
or
trouble.
graffitis.
Yeah, okay. All right. So pretty good place to live both sides.
Yep. And then the stock on market percentage, Karama's 0.34 versus Kirwan's 0.27%.
So basically 0.2% and 0.3% essentially.
Yep.
So a fraction. And we're talking stock on market. Now, is that stock on market change? That's current stock on market? What is that?
That's the current stock on market.
Got it. So with Kirwan, we're talking that's essentially out of all of the available houses or stock that's there, it's like 0.2% is for sale currently.
Yep, definitely. So it's a really tight supply.
And what is a balanced number for anyone that's only just starting to learn the data?
So anything under 1.5 would be definitely a good indication that it's a tight market. So anything under 1%, that's totally a tight held area.
Got it. Okay.
And between 1% to 1.5, I'd say that's a balance.
So 1% to 1.5. So if you're looking at an area and it's got 3% of stock on market, there's probably some cause for concern.
I would say yes.
Yeah, but again, that's an isolated indicator.
Yes, exactly.
Got it. All right, so both areas, again, looking pretty good. Obviously, Kirwan's more tightly held.
And what's interesting is we can tie that in with inventory level for Karama's Darwin of 1.54 versus Kirwan's 0.43. So less than a month.
Right, okay. So, but Karama's still pretty tight though, 154, basically 1.5 versus half.
Yes.
Yeah. Okay. So you keep giving me exacts and I keep roughing it out. But either way, again, Townsville is tightly held versus Karama. Okay. But you're not painting a picture though of something that's dead in the water. Like you're still painting a picture to me for Darwin and more specifically like the Karama like LGA here of some decent pressure still.
Of course. And the thing is the supply for both areas has been continuously going down.
Right. Okay. So both are heading in similar directions, but both are just at different times at the moment, like of that cycle.
Yep.
Anything else you want to talk about on a suburb level before we get into a cash flow comparison?
Well, I was about to say this, the rental yield, but let's just dive in on the numbers.
Okay. All right. Let's do it. So which one do you want to do first, Darwin or Townsville?
So let's just do the Townsville first in Kirwan.
Done?
Yep.
What do we got?
Yep. So the address is 52 McBride Street in Kirwan. So we want to compare as much as possible apple to apple, right? So the price range that we have is between 450 to 550. And then the number of bedroom is 3 bedroom, 1 bath or 2 bath. And within the 550 to 650 square.
Okay.
Right? So this one is a 3-bedder, 1 bath and 1 garage. Looking at the photo, it's pretty much...
Looks nice. It's done.
Yep. You don't have to do anything, or I don't think you can do anything here to add more value.
No, that's pretty much sorted. Like you could do things, but you're already paying for a setup home.
Yep. So next is we're gonna go to the one in Karama. It's the same. It's 3-bed, 1-bath, 4 garage, and I said we will stick to as much as possible 600 square, right? But the thing is, I couldn't find any more within the 600 square.
How big is this?
This is 769 square, but it's within the price range that we have.
Gotcha. Okay. So it's a bit of a bigger block just because you actually physically couldn't find one similar.
Yes.
Yeah, gotcha.
For the price point that we have.
Okay,
right?
cool.
So
gotcha.
this one is 515,000.
515,000. Yep. And out of interest, is this still the cheapest one that you're finding? Was there others, like if someone was willing to like roll up their sleeves and put in a bit of sweat equity, you can still pick up in Darwin at the time of recording at least in the sort of 4s?
You can definitely on the high 4s.
High 4s, yeah.
Will need a lot of work.
Yeah. Okay. So if you want set and forget, you're not having a 4 in front of it.
Yep.
Got it. Okay.
So this one, it's pretty much you can rent it out right away. But this one,
I never understand that when the photo gets little like that. So what are you doing?
As a real estate agent,
upload the same size.
Yeah. So definitely this is a livable and can be rented out. Yep. But this one you have an opportunity to add value.
Gotcha. Yeah. Okay. All right. So we're comparing apples with apples as much as the block's a little bit bigger. That's just basically the way that it is as far as what's on the market at the moment. Yep. Similar kinds of prices, similar kinds of size houses. One of them's a little bit more done than the other. You're not really adding any value. Yep. The other one's got some potential for a little bit of an equity uplift. And obviously we say that before looking at comps. Like this is not a renovation episode. This is purely looking at now the cash flow of both of them. All right. Let's start breaking these down cash flow wise. What have you got prepped?
So we're putting it side by side. So on the left side we have Kirwan in Townsville, and then on the right side we have Karama. So what we did here, we put the purchase price. We try to be conservative, right? So we put the highest, which is $499.
Gotcha.
And then on the other one for Karama, it's $515.
Okay.
And then we both set it up to 30 years as a loan period, and then the interest rate 6.7.
6.7.
For both. Yep.
Okay.
And then we set it up for interest only for 5 years for both.
Interest only for 5 years. All right. And Karama's got a slightly higher buy price.
Yes.
Got it. Okay.
Yeah. And then we put the taxable income for the buyer, let's say a couple, each earning 110 taxable income and with a 50-50 ownership. The reason why we're doing this so that we can compute the after-tax cash flow.
Got it. Okay. And so for anyone that's watching right now thinking, well, that's not my situation, this is all obviously changeable. This is just for a bit of an explanation as to how the cash flow changes after tax.
Yep. And the good thing with this is you can change the numbers here and you can definitely assess if it matches your situation. Right?
Understand? Yeah. Okay. And how does it start to unfold? What have you got in here? Because Townsville is obviously pretty high for like council rates, insurance, things like that.
Yep. So we factored in those added costs.
Yep.
So we added, we made the council rate to $235 per month. So that's around $2,820 in a year.
Sounds about right. Yep.
And then the water is the same. We kept it at 100. And then the insurance a bit higher because of floods and all.
Yep.
We put it at $175 per month. So that is going to be $2,100 per year.
Okay.
And then the property maintenance we've allocated $100 per month, and the property management is at 8.8%.
8.8%. Okay. And how about Darwin in Karama?
So in Darwin, it's less in terms of council. So that's $200 a month.
Yep.
So it's $400 less in a year.
And obviously, these are just kind of fictitious numbers that we're averaging. Every property is going to be slightly different in every location.
Yep. And then insurance, we put it as lesser, right? At $100 per month. And then the property maintenance, same, $100 per month. And then the property management is the same at 8.8%. Right?
So who's coming out on top cash flow wise?
So in terms of cash flow wise, after tax,
Yep.
we're looking at Karama.
Karama.
Yep, in Darwin. So it will be provided that we buy at a 20% deposit, right? And the yield would be at 594 because I called the real estate agent, right? So the average that we can rent this property that we're looking at is at 595. Okay. So that's 5.94% gross yield.
And this in Karama, this is the one before any kind of like cosmetic uplift. So there is still a bit of room to improve that again. All right. Now comparing the two just purely on cash flow, what are your negative buy or positive buy in the first year for each of them?
So let's start at the one in Townsville. Yep. So we are negative by 6,579.
6,500. Okay. Yep.
And then for Darwin, we are negative by 3,844.
3,844. Right. So like not quite half, but almost.
Yep.
All right. So Darwin, as far as cash flow, is really jumping ahead. And again, this is just using averages. This to me is showing that you've actually got potential in both markets to actually maybe even find a neutrally geared or slightly even positively geared deal if you construct it right.
Yep, definitely. Again, it's all going to start in how much can you buy the property. So the negotiation skills, that's where it comes in, right?
Exactly. And then if you can get it slightly under market value, you can then increase the rent on it. You're in an area where maybe rents are going to rise. You can add a bit of value to it, make it a nicer property to live so you can then charge accordingly for it. I know, because how long technically as it sits right now before you're positive in Darwin on your calculations?
Yep. So in Darwin, it'll be after 6 years, 2031. So on 2031, you'll be positive 1,064.
1,064. Yeah.
Whereas in Townsville, you'll be positive in 2034. So 3 years more. Right.
So as far as cash flow then off the bat, Darwin is looking like it's sitting ahead in this comparison at least. For everyone that's thinking, have I missed the boat with Townsville? Has it done its dash? And is Darwin now the place to plant the seed? What are your thoughts from the data perspective, Gilbert?
Well, from a data perspective, I would say Townsville hasn't really missed the boat, although there's still room for growth, definitely, because a lot of the supply-demand indicators, especially the supply has been really going down, trending down, and days on market and the sale listings has been going down. But most especially, the interest is still there, and the yield factor is still there. We have here 5.34.
Almost 5.5% yield. And again, this is just average yield or median yield. This isn't a special high yield or a low yield.
Yep.
So showing that potentially getting something in the sixes is possible if you can put the deal together correctly.
That's correct.
Got it. Okay, so as far as Townsville being at the end of it, everything that you're seeing is suggesting it's not at the end. It's still potentially got a lot more room to grow. There's some huge infrastructure spends there. Its GRP is like pretty solid, almost double that of Darwin. Even though its population's higher, it's still not double what Darwin is. Like Darwin, would you say 160 versus 200 and something? Like it's a lot more, but not as much more as its GRP is suggesting. Our searches are almost triple that in Townsville, 4,600 versus 1,600 in Darwin. Okay, now talk to me about Darwin, it being too early. Okay, because I believe every area's got its time eventually in the sun, whether that's now, 2025 for Darwin, or whether it's like, maybe it's still too early. This is more of a 27, 28 kind of market. Again, what does the data suggest?
Well, based from what I'm seeing right now, I'd say it's still pretty early because the interest is there, but it's been flat.
Because technically it's gone backwards over the past 10 years, hasn't it?
Yep.
What's its average 10-year growth?
Our average compounded growth over the past 10 years is negative 1.2%.
So that's horrible.
Yep.
Okay, so if you bought a property there 10 years ago, you've lost money.
Yes. So it hasn't really gone up yet.
Okay, so to me, this kind of comes back to that whole fable, like the two shoe salesmen that go to the village. It's like one sees no one's wearing shoes, and if you listen to the channel a lot, you probably heard me say this before. One sees no one's wearing shoes, and they're like, send me home. These guys don't like shoes. The other one goes, oh my God, no one's wearing shoes. Send them by the container load, like everyone's a customer. It's the same thing, but it's the way we view it. And I know some people will be looking at that going, well, this is proof, hard and fast proof. Over 10 years, it's lost money. It's not going anywhere. Other people might look at that and go, well, this is obviously an undervalued market. For the past 10 years, it's gone backwards. It's got so much room to move up. What are the things that you need to see change to support that? Yes, it's got room to move up.
Well, definitely when the supply listings has been trending down, right? And then the days on market has been trending down. And then also the interest on people has been started to slightly move up. Because right now, for the suburb that we look at, for the median price, hasn't really increased. So it's just increased by 1.5% over the past 12 months.
So you're looking at this as it's still very much in the early adopter phases. It hasn't proved itself over that kind of 3 to 6 month period yet?
Yep. Plus, I'm looking at the other macroeconomic factors. Compared to Townsville, there's a lot of infrastructure projects happening in there, which not only the value of the projects, but the X number of jobs it's creating.
Got it. Okay. So as far as Townsville versus Darwin, right now it's sounding like it's a big tick for Townsville, but it's a like watch this space for Darwin. Have I understood you right?
Yep. But again, it depends on where you are on your property investing journey. If my portfolio is I'm too negative and I'm looking for property number 6, then definitely I'd go for Darwin because it will improve my cash flow for the whole portfolio.
And this is where it's always coming back to, there's no one size fits all. There's no, this is the best investment. It's about where are you right now in your portfolio growth? Are you at the very beginning? Are you like needing more yield? Are you needing more capital growth? There's always going to be a slightly different answer because everyone is so different. But as far as comparing these two side by side, Karama versus Kirwan, it sounds like it's Kirwan, it's Townsville. They're coming out on top right now, as far as the recording, at least in 2025. But Darwin is potentially going to be a very close one to watch.
Yeah,
right? Is it
definitely. Plus, the only caveat here in terms of Darwin is there's a lot of properties that are being sold off market. And those off market properties that were sold, they don't appear on the data that we're looking at.
They don't get recorded the same way, do they?
Exactly. Yeah. So,
because what does it say in Core Logic? It's like not a true sale or something like that?
Yeah. From what I know, there's a lot of people buying in there, but it's under the radar.
Interesting. Is there anything else you wanted to wrap this one up with, mate, before we part ways today?
Well, all I can say is always run the numbers, right? Because at the end of the day, whatever type of property or whatever location it is, as long as that piece of the puzzle fits within your portfolio to achieve your goal, then that would be the best way to go.
Love it. Gilbert Melgar from Suburbs Finder. Thank you again for jumping on the show, mate. It's always fun.
All right. Thank you. Thank you for having me again, guys. Cheers.